When we're reviewing escrow and closing paperwork, what are things that buyers and sellers should look for on those?
The closing disclosure. So the lender 3 days before closing.
At least.
Yep.
Mm-hmm.
At least. So they can review those, and if they notice anything that needs to be changed, then you give your lender a chance to switch that out real quick.
Which is why it's important that,
You review
it's
it.
and that it's at least the 3 days before so that there is time to make those changes if needed.
Welcome to Lawrence Real and Local, Keepin It Real podcast presented to you by the Lawrence Board of Realtors. We're your go-to source for all things real estate in Lawrence, Kansas. I'm Lexie Haskin with Flint Hills Mortgage.
And I'm Campbell Ragan with McGrew Real Estate. Together, we're here to make the journey to home ownership a breeze. Join us as we share insider insights, expert advice, and a dose of fun along the way.
Hi, welcome to Lawrence Real and Local, Keepin It Real podcast by the Lawrence Board of Realtors. My name is Lexie Haskin with Flint Hills Mortgage.
And my name is Campbell Ragan with McGrew Real Estate.
And we are joined today by Elly Claussen with MidAmerica Bank. Welcome.
Thank you.
You want to give us a little bit background about yourself?
Oh, goodness. I feel like all I do is loans and laundry.
I love the alliteration.
Yeah.
The double L's.
That was fun.
Girl.
She has 2 L's too.
I know. Ellie with loans and laundry.
Oh
my gosh. I feel like right now that's all I'm doing to laundry with the babe. Like I just can't. Babe? Baby.
Maybe you do laundry with your babe. I don't
With
know.
my babe. But yeah, today we're talking about a really important topic. I mean, we're going to go over different closing costs, escrow, what that even is, what it might mean to other people. I mean, it's really important to even understand this when you're planning for home ownership, affordability, everything like that. So we are just loaded up on loan officers here.
We do.
Yeah.
I got a couple good ones here.
So do you want to just go over like what even is escrow and why is it important to a transaction?
Sure. So the important thing to think of is it's a neutral. It's a third party account. So there's 2 different types of escrow. Buyers and sellers use it for their earnest money or anything like, maybe a repair is being done, or maybe it's being done after closing. So that account is used to pay those things, or to hold the money for those things until they're done. So either it settles or escrow is refunded or however it works. We also use it on a mortgage loan. A lot of times a homeowner would like to have their homeowner's insurance and their property taxes, instead of paying them all at once, then they could divide it up, pay a little bit every month, and it's held in a escrow account on their mortgage loan. And then it pays those bills.
It's a free service too.
Yes.
And the lenders, they love to do it because it's less risk for them.
Absolutely.
Yep. True story.
Yeah, they know it's going to get paid.
Yep.
But
I like to think of it kind of as a piggy bank. So it gets collected and then it's there. It's a piggy bank that holds it and then it's used for those items. So
I think that's the perfect way to sum up escrow. It's a piggy bank. The money either for the transaction or the money for your taxes and insurance, it all goes in your escrow account.
Yep.
Yeah.
Absolutely.
And the fact that a lot of people don't even think about how escrow is also technically the title company too, like how you're talking about the earnest money.
Yeah.
Mm-hmm.
So then when people are like, oh, we're going to escrow. And it's like, yeah. So you're just bringing your money to the title company and then they're that neutral third party that's going to be handling those funds and then getting it to all the necessary places.
Yeah.
So, I mean, that's just our little basic understanding.
Nobody can hear me nodding, but but yes, you're right.
And so after closing, how does that escrow work? Walk us through that.
Sure. So once the purchase is complete, the lender sets up the escrow account to manage the ongoing property-related expenses. So again, that's going to be the property taxes, the homeowner's insurance, and also sometimes the mortgage insurance, if that applies.
Yeah.
So the lender or the servicer will manage that account, pay the homeowners when it's due, pay the property taxes when they're due, once or twice a year, whichever. And then once a year, they'll let the client know if they need to make any adjustments in that monthly payment that they're making, like if taxes go up, insurance goes up or down. What am I joking? I mean up.
Yeah, we hope it goes down, but in reality, it's
going
gonna
up.
go up.
Property taxes, your homeowner's insurance, and I mean, and that's
typically because the values go up too.
Yeah.
So
and I mean that's why too you have reserves paid at closing into that escrow account as a protection.
Definitely.
Because, I mean, we all hope that our monthly payment isn't going to go up, but I just got my annual escrow statement and mine went up a little bit. So, yes, sometimes it's hard to plan for. But, Elly, you've said before that sometimes you even will pay extra. Do you know about that? Yeah.
Yep, I did. Oh my gosh. Lexie you have a great memory. Yes, I did say that. And it wasn't even today. So I'm like really impressed. I'm impressed. So for me personally, I always know that my taxes are going to go up. But let's say, for example, if there's a shortage of $800 in my account, in my escrow account, well, that means I'm going to have to make that up either in my payment, or I can pay a lump sum so that my payment stays the same. Well, I like to plan on about a $50 increase every year for me personally. So if it was $800 short, I would pay $200 of that shortage up front in cash and let the other $600 be rolled into my payment. 600 divided by 12, $50. So that's kind of how I personally do it.
Yeah.
But it just helps me. Well, honestly, it's because I'm kind of OCD and my mortgage payment is always an even number. Yeah. Seriously, that's it.
You don't want to have like that $17.58.91.
Oh, no, that would drive me crazy. That
She's like, no way.
I mean, I would at least pay extra and make it $1,800, like something. I mean, because it's just, who can remember my mortgage payment is $17.81 and whatever cents you said? Nobody can remember that.
You got to look it up. Yeah.
You know, but if someone says my mortgage payment is $1,800, they can remember that.
Yeah.
So, but
it is a lot easier. That is so funny. I didn't even realize that about you, that you were just like,
oh yeah, I'm a weirdo.
Oh, you're not a weirdo. But I do like how everything has to be. So when I wake up in the mornings or whenever I'm setting a timer or alarm, it has to be for an original number. So I don't wake up at like 6 or 6:05. I'll do like 6:04.
Oh, that would drive Elly crazy.
I would
explode.
explode.
Yeah, like 6:04, 6:09, 6:17. But there's like certain numbers in my brain where I'm like, no, that won't work. Like 6:03, it's right in the middle of it, 6 and 6:05. So it has to be 4 or 2.
Nope.
Okay. Interesting.
But that would drive you nuts. Yeah.
Yeah. Okay. That's
So
quite interesting.
So
what, the difference or just
both? I mean, the difference
just
between
personalities.
personality.
Yeah, some people don't care.
The interesting part that like anyway, we're not gonna break that down.
You're
more.
like Lexie
we're not gonna get into that.
I'll go over the psychology when you're driving me home.
Oh
Okay.
my goodness.
Can't wait to hear.
So let's do a closing cost breakdown. So, I mean, what are the main components of closing costs?
Okay, so the main components of closing costs are going to be, well, I guess it depends. Are we talking buyer or are we talking seller?
Yeah.
The buyers typically pay for the loan-related costs, and the seller pays for the title-related costs and commissions, but they're not always required to do that.
It's negotiated.
In the contract.
Yep, sure is.
Did I just finish your sentence for you? Oh, that was kind of cute.
Wow. Ellie's shaking her head. No, not cute. Anyways, but it is.
We just had a frozen
It's cringy
moment.
instead of cute.
We had a frozen moment there.
Okay.
Each other sandwiches.
Frozen in terror. No, I'm kidding. I'm kidding.
That's what I was about to say.
Oh, gosh. Oh, my goodness.
No, but Yeah, so commissions are negotiated. So historically, it has been the seller's responsibility, but it is now a huge part of the contract that is spelled out.
Mhm.
Yeah. I mean, especially when you're talking about those title costs too, and sometimes the seller will pay for the owner's policy 100%. Sometimes that owner's policy will be split
Split.
50-50. Sometimes the seller's like, no way, Jose. But it just really depends. But yeah, that's something that you'll go over when you're doing that contract and negotiating.
Yep.
Yeah.
Awesome.
So, I mean, other common closing costs, I mean, when you're giving out that loan estimate and explaining it, so kind of go over like what people should expect to see as a buyer.
Okay, in their loan closing costs, they're going to see things like underwriting, or so under the origination section, there's underwriting or points, loan discount fees. Sometimes it's just called an origination fee. They will see,
Sometimes a processing fee too.
yeah,
Depending on the lender.
right,
Yeah.
right, yeah. They'll see, let's see, appraisal, credit report. Sometimes a title insurance, a closing fee. Well, and even on their final closing disclosure, they might see, like if they did a home inspection.
Yeah,
Mhm.
so that's something that your realtor should include on the costs. So that's going to be like a separate breakdown from closing costs that you see from, like, if you're getting a loan. That's not, sometimes it's included in there, but sometimes it's not on those estimates from your
Because
loan officer.
usually it's paid before you get to
Yeah,
the closing
so
table.
I mean,
Yeah.
it's paid for at the time of the inspection. So that is something that, as you're going through the process, you should talk with your realtor about what that costs look like.
But
Yeah,
it is, go ahead.
I was going to say, because a lot of people don't even think about those type of costs when they're planning
Yeah.
for budgeting for it. So, I mean, you
Yeah.
have those inspections,
Out of
sometimes
pocket
even
money.
like moving costs too. You're going to hire a mover if you need boxes, different things like that. So,
Sure.
yeah, a lot of people don't even think to do that, or that could even be considered as a part of it. But moving costs aren't necessarily closing costs,
Yeah.
but when you close, yeah.
I mean, it's all settled. But as far as the loan fees,
Yeah.
that's just
Yeah.
going to be the origination and processing, or, for the documents, the appraisal, title work,
Credit,
mortgage recording fee, or recording a
Yeah.
deed, or
Flood
and even
cert, yeah.
and even like setting up an escrow account or
Mhm.
that piggy bank.
12 months homeowners insurance.
Yep.
Yep,
Yeah.
exactly.
Which, that's not something, I mean, like, as a lender, that's not something that you guys are like, oh, it's $1,500 and that's how much is your homeowner's insurance. Like,
That's something
they
you shop for.
Yep. To clarify
it's
that.
customized. I mean,
Yeah.
not everybody's homeowner's insurance policies is okay.
Yeah.
Someone might be buying a $800,000 house and someone's buying a $300,000. Well,
Yeah.
It's going to look different.
Yeah.
Yeah, and I
That
mean,
cost.
if you want an umbrella policy with it, or
Exactly.
a higher deductible, lower deductible, I mean, it really does differ. So,
Some other closing costs that are part of the real estate transaction also are going to be recording fees if you're using like a title company. Well, sorry. The recording
recording
fees
your
with the
mortgage.
Yeah.
Mhm.
Yeah.
So
mortgage,
the
and then
deed
the
itself.
deed,
Yep.
the e-filing.
Yep.
It's,
those are title fees, though, typically that you'll see on your title.
yeah, under the title section.
Yep.
But that is something that, as lenders, that we will go over with you and it disclose, and just so you're aware up front. Yeah.
Yeah, usually that's pretty well lined out on the on a loan estimate that you would get, like when you're getting ready to write an offer.
Yeah, when
Yeah.
you're getting pre-approved. Yeah.
Yep.
Yeah, or
Definitely.
that too.
Yeah. And then you see final numbers,
Yes.
Yes.
3 days, 3 business days.
At least.
Yeah. Yeah.
I guess you
Yeah.
need to have time to review that.
Yeah.
We
But
always
at the very
hope that
latest, yeah.
at least. Yeah.
Yes.
So, in regards to like negotiating or reducing the closing costs, can buyers reduce or negotiate those?
Yeah, absolutely. They could do a couple different things. So they could look at different services, like different inspection companies or different title companies, title insurance. They could even ask their lender, like, hey, do you have any, so it's a lender credit, but they could ask, could you credit my loan towards my closing costs? But usually there's a trade-off because usually the rate is a little bit higher. You could also ask for seller concessions. So like the seller gives a credit, let's say for a few $1,000s towards the seller paid, I'm sorry, towards the closing costs.
Yeah. There's a section within the offer that specifies that there would be seller paid closing costs. So
front page. You're
yep.
right. Yep.
Right there, up there.
And there is, depending on how much you're putting down and the loan program, a max contribution that a seller can have. So it's always good to check with your lender and go over and see how much you can give. And even depending on the loan program as well. For example, with FHA, you have a minimum contribution of that 3.5%. So no matter what, you have to at least pay that 3.5%.
Yeah.
A lot of people don't realize that. They're like, but I can have up to 6%. Like, yeah, but you still got to pay your 3.5%. So you got to pay that still. So that's just another thing. And then
the first time home buyers, there's something they can do, right?
Yeah. Any type of, if there's first time home buyers grant, or even there's grants sometimes for folks that are not first time home buyers.
Yeah.
It just depends. Always ask your lender. Usually those grants are going to be tied somehow to the area median income, which Douglas County is $81,600.
Yeah.
So that would be like for a household of 1 to 4 people.
Yeah. And those numbers are for 2024.
Yes, but they've not been changed for 2025
yet. Yeah.
I think they come out in June.
Okay. And as of right now, this is being recorded in March. So this will be
of 2025.
Yeah, of 2025. So this is coming out before June, so we'll be good.
Yeah.
Okay. Yeah.
Nobody has to remember that.
Just ask us.
Just ask. Talk to your lender about potential credits that you might be able to utilize or programs that exist for what type of loan you're doing.
There's even a very low income program as well. So if you're within 50% of that area median income, which I don't know off the top of my head, Elly was great with just having that number off the top of her head for the 80%. But you can get, is it a 1,500 credit? I'd have to review. It was like with Fannie and Freddie for a conventional loan. They're very low income credit that they have.
So I think there's a couple different different things.
Tiers. Yeah.
So I know what you're talking about, but like the state of Kansas has stuff too.
Yeah.
It's just really going to kind of depend. But there's so many things, and they can be stackable. So you might have a better interest rate, like a Home Ready or a Home Possible program.
Yeah. And you get better mortgage insurance with those as well too. Yeah.
So just make sure you talk with your lender, because everyone's situation is going to be different about if they can stack or they can qualify for one but not the other. And so just make sure you chat about those. Those exist, and sometimes they're more readily available certain times of the year as well. So
that's true. Yeah. There's some grants that are typically, they launch about March, and usually they're used up in the summer.
Yeah.
So, but there's stuff all year round.
Yeah.
Just talk to us. The right time to buy a house is whenever you're ready.
Yeah,
yes,
absolutely.
Say it louder for the ladies in the back. That's my motto today. Say it louder for the people in the back.
It's true.
I think that's the third time I've said it today.
You really have.
Oh my goodness.
Yeah.
Yep.
I'm just going to keep saying
For
it.
the record, I was not here during those other ones.
I was, and it did in fact exist. So when we're reviewing escrow and closing paperwork, what are things that buyers and sellers should look for on those?
They should look at the closing disclosure. So the lender 3 days before closing.
At least.
Mm-hmm.
Yeah.
Yep.
Mm-hmm.
At least.
At least.
At least. Because they can come out 20 days before closing.
Yeah.
You never know.
Yeah.
But anyway, so at least 3 days before closing.
Yeah.
The buyer will get they'll get the summary of, hey, here's all the cost of your transaction. Your appraisal was this amount. Your credit report was this amount. your homeowner's insurance is X, and so they can review those. And if they notice anything that needs to be changed, like, oh, hey, I did get a quote from that insurance company, but ended up using this one, then you give your lender a chance to, okay, no problem. Let's switch that out real quick.
Which is why it's important that,
you review
it's
it.
and that it's at least, the 3 days before so that there is time to make those changes if needed.
Yeah. You're not just sitting at the title company and you're like, hey, actually, I want to use this. And we're like, can you please just change that after closing?
Yeah.
Because you can switch that after closing.
Yeah.
Yeah.
And you want your realtor to check over it as well. They should be looking at it and
It's a
they
good
should
idea.
be making sure that it's accurate as well. So,
And if you don't know what something is on it, ask.
yeah.
Ask.
You don't understand what that fee was for, you need to know. You're paying it. So,
Well, and you should be able to match it up pretty close, compare it to that original loan estimate. If there's dramatic swings that you don't understand,
it's a conversation.
that's a conversation to have.
Yep.
I've had it happen before that somebody thought their income was one thing, and then, hey, it's really not because you don't work 40 hours, you work 32, right?
Yeah.
So, if the income's lower, we might have to make an adjustment. For example, if we were giving a lender credit,
Yeah.
right? Well, if they don't qualify at that rate with that lender credit, we might have to reduce the lender credit.
Yeah.
So there can be some changes.
Yeah.
Your lender should advise you, throughout the process. It shouldn't just be, hello, here's a surprise
Yeah.
3 days before closing. But that's why there's that 3-day rule, because you'll have time to review it.
Yeah. And I think it's important to note that closing disclosure, it's going to have your exact cash to close. What you need to come to the title company or wherever you're closing, and you got to have it. You got to have that money right then and there. Yep. Down to the cent. It has the cents. Let's move into regulations and consumer protections. So how are escrow and closing costs regulated?
Well,
this is real fun, people.
Yeah.
So it's called RESPA, which is the Real Estate Settlement Procedures Act.
Say that fast 5 times, please.
No. Nope. Real Estate Settlement Procedures Act. Once. Anyway, so that is basically, that governs how we have to make sure that we, as a lender, we have to make sure that we are fully transparent. So everything's lined out.
And that has to do with your fees. Is that correct? Okay.
I mean, there are other rules that go along with it,
But
but
mainly fees.
Yeah, but I'll let Elly go into it.
Okay.
Yeah.
Thanks.
Yeah, you're welcome.
So the other, let's see. So we have TRID, TRID. So it's the Truth in Lending Act, RESPA Integrated Disclosure.
Ooh, say that 5
No.
times
Yeah.
again.
No,
I know.
stop
I'm
it.
sorry. They're all just like tongue twisters.
Somebody mute her.
Muted.
Oh, so that requires lenders to provide clear, accurate breakdowns and within timeliness too.
Yeah.
Let's see. And then what else? Well, and then of course we just talked about the loan estimate or good faith estimate and the closing disclosure. Those are all regulated as to when they come out.
Awesome.
Yeah. And all of those were put into place to protect consumers.
Yeah. Yeah. You don't want to be quoted one thing and then walk in and go to closing and
Completely different. Your terms
Surprise.
have changed and just all the things.
yeah, no.
Right.
You don't want that. That's why Elly mentioned, looking at that original one, and if it's drastically changed, that is a huge conversation to have of like, why are these fees, why are these things looking so different? Because that is not what I was expecting. That's not what I came prepared for. And so that's a different conversation to be had at that point.
Mm-hmm. Well, and again, hopefully that conversation happens when the change happens.
Yes.
Yeah.
Yes, absolutely.
I'm sure Lexie and I, both of us have had somebody, oh, hey, your income came in a little lighter than what we
Yeah.
thought. So we have to discuss those things.
Yeah.
Yeah, you have to have those hard
have to adjust.
conversations.
Mhm. So can you put a little bit more money down, or instead of this? So
Yeah.
anyway,
Yeah.
Make those
You
adjustments.
pivot.
Yep. Absolutely.
So long-term considerations for just escrow accounts. So how do they change over time? I know we kind of touched on that a little bit in the beginning, but just when does that review happen? When should people expect to see that in the mail, everything?
so typically that review is somewhere around the 1 year, or I'm sorry, your anniversary of your loan. So if you're just buying a house a year later, you should expect to receive something from your lender. It's going to break down, hey, your insurance over this last year was X amount different than last year. What that means is you have an overage or you have a shortage in your escrow
Mhm.
account. And then they'll offer you 2 solutions. You can pay X amount, or you can have your
Increase your
payment be this
monthly.
much.
Mhm.
Yeah.
Mhm. So
Could you do both?
it depends on the lender.
Okay.
So MidAmerica, yes. But I don't know. Like I have a loan that's also serviced. So I have one MidAmerica and one elsewhere.
Mhm.
And that one, no. It's either or. You either pay all of the shortage or none.
Okay. Interesting.
So just check with your servicer.
Yeah.
Yep.
Okay.
They'll be able to tell you. Sometimes you might have to wait on the phone a little bit, but that's whatever. It's whatever.
Okay.
You just know. It's like,
It's like waiting on hold.
yeah, wait on hold. You just do it while you're like doing the dishes or something. You just have like in your ear.
Doing
you're,
the
like,
laundry.
Doing the laundry. Loans and laundry.
That was aimed at me.
It was. I need you to do my laundry.
No.
She knows I have a baby. Okay.
So what if there's an issue with escrow or your closing costs?
Well, the closing disclosure should tell you basically, hey, here's your closing costs. If there's an issue, bring it up to your lender and say, hey, I didn't agree to that. Or, you forgot my seller paid credit or my
Yeah.
seller
Mhm.
credit.
Yeah.
Whatever it might be, just bring it up.
Yeah.
Just mention it.
Yeah.
Nobody's going to be mad at you if there's an error or if you have a question.
Yeah.
Yeah.
Absolutely.
Do you want to debunk some common myths?
Yes.
Fact or fiction. Here we go.
Let's get into it. You can shop around for certain closing costs like title insurance.
That is a fact. I knew what you meant.
She can even say
Do you want to
that.
say that again?
I don't know. Do I?
Redo.
Yeah, redo.
You can shop around for certain closing costs like title insurance and home inspections.
That's a fact.
Yes.
So a buyer can compare lenders, title companies, home inspections, and it might be able to save some money here or there.
Yep. Your escrow account always covers all home expenses, including repairs and home maintenance.
Your escrow account will not mow your lawn for you.
Oh, man.
No, that is completely fiction, but it's a nice idea.
Yeah. And it won't cover your HOA fees either.
No,
Yeah. That's
that
good
does
to
not
know.
exist.
Yeah.
Yeah.
You do have to qualify with that HOA in your monthly payment, but it will not be included in your escrow account.
Good to know. Is that something you could change? Like if I was like, hey, I want it to include that? No.
No.
Okay.
No.
It can never be. Okay.
The
It can
HOA,
never be.
Yeah, the HOA.
HOA cannot be.
Okay.
Mm-mm.
Okay. Good to know. Got it.
I almost feel like that would be too difficult because HOAs, some are quarterly, some are
That's true.
semi-annually,
That's
some
true.
are monthly. It would just be too much for a lender to try and keep track of. I don't know. That's probably why they don't. Or they don't want to be responsible for what.
For the payment. Yeah. And
what it
making it out
covers.
to the right. Anyway.
I don't know.
Sorry.
That's just a thought in the back of my head. I'm just like spitballing there.
I think it'd be nice, but
Yeah, I think it'd be
I
nice,
do think
but
it'd be nice. One less thing to worry about, but
yeah, whatever.
Anyway.
Sellers are always responsible for paying the buyer's closing costs.
that is fiction.
Like we talked about, there's a spot on the contract.
Yes, if they have agreed to, then yes.
Yeah.
If they have not, you can't just say, "Well, wait a minute."
Wait a minute. I want you to pay this. No. Don't work that way.
Dish it out.
Okay, so the closing disclosure will show exactly how much you need to bring to the closing table.
That is true. The bottom of the front page will have your exact cash to close.
Exact.
Word.
Drop mic.
Well, sweet.
Yeah. I
Well-
think we really broke it down, and hopefully, that allows people to understand escrow and closing costs and, what to look for in their closing paperwork.
Well, thanks for joining us, Elly. It was a joy.
Of course.
Thanks.
Of course.
So if you need anything, reach out to Elly with loans and laundry. So
She's like, I regret saying the laundry.
no
Forever.
comment.
and thank you to the Lawrence Public Library. It's always great being here. Okay, signing out.
Thanks for joining us on Lawrence Real and Local, Keepin' It Real podcast. We appreciate our guests taking the time to join us. Don't forget to subscribe and leave a review if you've enjoyed today's episode.
For more information, please visit us on the web at www.lawrencerealtor.com. And remember, whether you are buying, selling, or simply dreaming of your future home, we're here to help. Until next time, keep it real
And happy house hunting.